Hello and good morning. You're watching Market Cafe on ET Now with me, Snehisha, and with me is my co-anchor Shreyansi Singh. Now, this is a show where we'll take you through all the important stories that we've been tracking for you overnight, everything major that's happened while you were asleep globally as well as in India, and all the news and updates that have been pouring in over the last few hours. In the second half of the show, we'll also take you through all the stocks that you need to be keeping your eye out on and what brokerages are also favoring this morning. What are they pointing out? What are they flagging off? So, well, with that, we'll kickstart the show then with looking at the global handover. And Shreyansi, good morning. Take us through what was happening on Wall Street yesterday. Some stellar gains, some stellar moves on the back of that FOMC meet. So, tell us more about it.
Absolutely. So, it's been a string of winning days that we've seen off late. And when you look at what has happened, S&P 500 futures rose after mega cap tech titans reported results. And investors also looked ahead to the January jobs report. Now, when you see shares of Meta as well as Amazon, both of them surged in trade as well. We'll get you more details on that later. And the moves, of course, follow a day of rebounds during Thursday's session. And when you look at the Dow Jones Industrial Average, that added about 1%. You have the S&P 500, Nasdaq, also gaining about 1.25% and 1.3% respectively. The action follows a Wednesday sell-off that started after Federal Reserve Chair indicated that a rate cut at the March meeting was unlikely. Now, investors and the Fed will have another data point to mull over with the release of January's jobs report, and better than expected earnings across the board. That's something that we've seen play out, and that has warranted the market's constructive reaction largely. So now you've got, in terms of earnings candidates, you do have Chevron, ExxonMobil, Bristol Myers Squibb, as well as AbbVie that are all due to report earnings before Friday's bell. So those counters will remain in focus, and let's see what happens with Wall Street after those numbers. European stocks, on the other hand, closed lower, and this was after the Bank of England held interest rates steady and Eurozone inflation figures gave a mixed picture. Now, the pan-European stock 600 closed about 0.5% thereabout, and this was a pullback from the two-year highs it scaled in late January. Now, mining stocks fell 1.3%, while oil and gas rose by 1% following oil prices higher. The moves followed a midday policy announcement from the BOE, which delivered an unexpected split vote that highlighted the tricky picture facing central banks. And this is as inflation moves closer to target. So that's largely the action that we've seen coming in on the European markets front. And that is the handover coming in from the international markets.
Well, absolutely. With that, let's also take stock of what oil was doing. And well, oil prices fell on Thursday as traders monitored efforts to negotiate a ceasefire in the Israel-Hamas war. But what's key to note is that oil prices spiked shortly after. Now, the WTI contract for March fell about $2 or 2.68%, but is now up 0.7% at 74.3 whereabouts. And now let's talk about Brent, because the Brent contract for April also fell about $1.8 or a whopping 2.3%, but now Brent is also higher by almost 0.9%, just at kissing distance away from that $80 per barrel mark yet again. Now, the benchmarks had risen more than 1% earlier in the session. The market digested the outcome of the OPEC committee meeting and the Fed Reserve decision on interest rates. Now, remember, the OPEC committee had said that the group's members were adhering to production cuts after reviewing data from November and December of last year. Now, the committee has proposed no change to OPEC's decision to slash 2.2 million barrels per day from the market starting this quarter. So, well, largely those are the moves coming in on oil. Falls, or rather sharp falls earlier in the trading session, but oil and Brent, WTI and Brent, both trading higher as we speak. And let's shift focus to another asset class, and that's gold, because gold has firmed nearer to a one-month high on Thursday after data showed that US weekly jobless claims rose last week, as Shreyansi mentioned, while market focus shifted to the non-farm payroll data for the US as well for more cues on Fed Reserve's policy path. Now, spot gold was up almost 1% at $2,054, almost $2,055 per ounce, hitting its highest level since the 3rd of Jan this year. So, well, largely the moves coming in on oil and gold, but another asset class, if you can call it that, I want to mark is Bitcoin and cryptocurrency in general, because Bitcoin is also trading higher by almost a percent as we speak. A $400 uptick coming in on Bitcoin, Ether almost up 0.5%. So, well, big moves coming in the world of crypto. Oil is also spiking, gold is also at a 1-month high. US equities also notably are doing really well. So, well, that's a strange phenomenon we're observing in the US markets, but well, it is what it is, and it seems to be positive for the street, Shreyansi.
Absolutely. And since you mentioned central bank action, let's delve a little deeper into that. The US Federal Reserve left benchmark interest rates unchanged at 5.25 to 5.50% for the fourth straight meeting, largely in line with estimates. The US Central Bank ended its first policy setting meeting of the year and unanimously voted to hold the policy rate at the 23-year high mark. However, does not expect that it will be appropriate to reduce the target range until it gained confidence that inflation is moving towards the target. Meanwhile, IMF's Kristalina Georgieva also said that she expects the Federal Reserve would begin to cut US interest rates in a matter of months, but cautioned that there was a risk to the global economy of waiting too long to ease policy.
Well, shifting focus from one central bank to another, let's look at Bank of England's monetary policy meeting and the commentary that's coming out from there. The central bank holds rates at 5.25 for the fourth consecutive time. Following recent weakness, the GDP growth is expected to pick up gradually during the forecast period, in large part reflecting a waning drag on the rate of growth from past increases in bank rate.
Well, as promised, let's also talk about Meta as well as Amazon. Now, Meta reported a beat on earnings and revenue in the fourth quarter. Company also announced its first ever dividend payment. Stock soared 14% in extended trading. Meanwhile, tepid China sales weighed on Apple's earnings. Company did, however, deliver a beat on the top line. Shares of Apple extended losses in extended trading. And finally, shares of retail giant Amazon surged on the back of a beat in the fourth quarter, largely led by the holiday season boom coupled with optimistic outlook for the months ahead.
Well, and shifting focus to some other earnings then, luxury sports car manufacturer Ferrari finishes off a record year of profits with a top-down beat in earnings. Now, the automaker reported a net profit of 1.26 billion euros for 2023, including 294 million euros during the fourth quarter. And well, Shreyansi, when we talk about Ferrari, how can we not talk about the recent news update that we're just getting this morning? Lewis Hamilton has been confirmed to switch from Mercedes for the 2025 season, and he's going to be moving over to Ferrari, who's going to be replacing Carlos Sainz. Seven-time world champion Lewis Hamilton is shifting from Mercedes. He's been for the last 13 years and he's coming over to Ferrari. So that's the big update that we're getting from the world of Ferrari bright and early this morning.
Absolutely, that's a big update coming in, but rating agency Moodys thinks India still has some work cut out for them to raise the ratings for the country. What are those weaknesses? Here's what we got from India sovereign analyst Christian de Guzman.
We don't necessarily see just yet how the weak points of India's sovereign credit profile are strengthening in a material way. Indeed, we do acknowledge that there has been some fiscal consolidation, as I had mentioned, over the past few years emerging from the pandemic, but that has not yet at this point and going forward by a year or so, at least through the path that has been articulated in today's budget, we're not seeing a degree of fiscal consolidation that would lead to material debt reduction. Debt, as I had mentioned earlier, is still above where we saw India prior to the pandemic, about 10 percentage points higher. And perhaps the other thing that we're looking at is not just deficits, not just debt, but we're also looking at debt affordability. Here, we haven't seen meaningful strides in terms of the share of revenues that are dedicated to debt servicing, and that is a function of the currently very high debt. The Indian government's ability to access financing has always been very strong. Indeed, there has been a domestic source of captive financing through the banks, through the statutory liquidity requirement, through the insurance sector, which soaks up a lot of this, and also the intermediation of savings by local asset management firms and the like. So that ability to finance itself was never really in question. It was never a weak point in the India sovereign credit profile. Over time, perhaps this inflow of international money, of non-resident investors into the local bond market could lead to perhaps lower financing costs, but only over time.
All right, that's the word coming in from Moodys. But with that, we'll slip into a very short break. When we return, we'll take a look at how the Asian markets have opened up this morning. So you stay tuned.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at the Asian markets then. And you're seeing a sea of green coming in for the Asian markets, mirroring Wall Street's rebound from the sell-off earlier this week. And when you're looking at Kospi, that is up firmly in the green right now as we speak. In Asia, investors will wrap up the week with January inflation figures out of South Korea and producer prices from Australia as well. Now, when you look at South Korea's consumer price index, that grew 2.8% year on year, slightly below the 2.9% expected in a Reuters poll of economists. So you have Kospi that is firmly up in the green, and ASX 200, Hang Seng, Shanghai, Nikkei, all of them firmly up in the green as we speak. So that's largely what you're seeing, and on your screens there you have it, Kospi 1.7% up, Hang Seng 1.9% up. When you look at Shanghai as well, you're looking at gains coming in on Shanghai as well, but Nikkei on your screens up about 1%. Shanghai also just a little bit in the green, up about 0.2% thereabout. But you're seeing a sea of green coming in on the Asian markets as we speak. Nifty implied also indicating a gap up open. We closed around that 21,697 level yesterday. And today, the Nifty implied is showing a gap up open of 162 points this morning. So let's see how that pans out for our markets as well.
Absolutely, Shansi. We'll see how that pans out for us this morning. But on that, here's a programming note for you then. And ET Now and ET Now Swadesh, in line with helping Indians rise with India, have partnered with Sundaram Mutual to launch Nivesh Day, a groundbreaking campaign to help viewers build their personal finance portfolios through regular and disciplined investing. Now, Nivesh Day is being celebrated on the 5th of every month, so join ET Now Swadesh and Sundaram Mutual to learn how you can build your financial future with an SIP in mutual funds.
Welcome back. Thank you so much for staying tuned in. On to an exclusive then, and we'll add 40,000 kilometers of new tracks over 6 to 8 years. And that's the big exclusive word coming in from the Railway Minister Ashwini Vaishnav talking to ET Now. He said that the centre is planning to develop railway corridor as Amrit Chaturbhuj, similar to the Golden Quadrilateral, which is the national highway network connecting several major industrial, agricultural as well as cultural centers of India. Listen in to a slice of this exclusive conversation.
India has come out from being fragile 5 economies to top 5 economies. That is the transformation which has happened in the last 10 years. It has been a period of inclusive growth. People who were left out of the development process, they have all been brought into the mainstream, whether it is through Ujjwala scheme, whether it is through Pradhan Mantri Garib Kalyan Anna Yojana, whether it is through the Pradhan Mantri Awas Yojana. Multiple number of programs have been structured for bringing the people who were marginalized, bringing them into the mainstream. Simultaneously, Prime Minister has focused on the creation of physical, digital and social infrastructure. Whether it is ports, airports, railway lines, highways, transmission lines, everywhere you can see a complete transformation. On digital side, the way the number of towers have grown multiple times, the optical fiber cables have been laid, lakhs of kilometers, both physical and digital and social infrastructure. Number of IITs have increased multifold. New aims have been started. New medical colleges have started. It's a very holistic program that Prime Minister has laid. And finally, manufacturing. very big, very big focus on manufacturing. So if you look at the complete economy, today we are in a situation where country is comfortably growing at 6 to 8% with inflation under control. From fragile 5, India has emerged as among the top 5 economies, and Prime Minister Modi's policies will ensure that in the next 3 years, India will be among the top 3 economies.
Now, talking about the interim budget, some key highlight was from your sector, from your particular ministry, that 3 specific corridors are going to be developed. How it is going to be, taking shape? What are these 3 corridors? What sort of investment that you will be putting in?
This is a very important development. Over the last 2 years, we have been working in a very scientific manner. What are the origins of cargo? What are the origins of passenger transportation? What are the destinations to which cargo goes? What are the destinations to which passenger movement happens? We have put all these origins and destinations on PM Gati Shakti portal. That gives a very good planning tool. We have put our existing network and these origin and destination clusters onto the portal, and using that portal we have come out with requirements for new lines, requirements for doubling or tripling or quadrupling, requirements for decongestion by bypassing some habitations. All kind of detailing has happened over last 2 years.
All right, that's the exclusive word coming in from the Railway Minister to ET Now. But well, let's get a move on then. And talking about Budget 2024, DIPAM Secretary Kanta Pandey said that the government is not looking at one specific number for any divestment target. Meanwhile, the Finance Secretary TV Somnathan also spoke about concerns ahead in FY25. Listen in to what both of them had to say.
We aren't, number one, looking at one specific number for disinvestment. I think if we are looking at quite a paradigm change in public asset management. And it is a total value creation is what we are really looking at. Now with 61 listed companies that we have and 16 public sector banks and PSICs which are listed, we had a combined market cap of about 15 lakh crore 3 years back as on 1st of January 2021. And today, after 3 years, it stands at 58 lakh crores, a value creation at unprecedented levels of 42 lakh crore. Now, I mean, if you look at it, it is that which is important. When we listed the company, it is really to bring in investors who participate in the growth, in the wealth. So wealth creation is important, and wealth is created through hard work, through the governance models in that, through, bringing in all kinds of efficiencies, bringing in the incentive system which is aligned to the shareholders, the profitability, the dividend sharing. There were lots of things involved, for example, in the Shipping Corporation of India in terms of demerger, because a lot of assets like shipping house and, a lot of land and the training school located at Powai had to be separated out, and the demerger took place. And now the demerged company will be listed very shortly, possibly within a month. And thereafter, I think we can continue with the financial bidding process. This process is on. Now, similarly, the second one you were talking about, the IDBI Bank. Yes. So the IDBI Bank, similarly, the process is on, and now the RBI, which is the regulator, is seized of the fit and proper testing of the existing bidders. As soon as they complete that, we will be onwards with the due diligence exercise.
I don't have any overwhelming concern. I think the international developments are always a concern. That's the one thing that we can't have much visibility over. So we are quite confident of managing what is visible now. But if something new happens somewhere, then that is a risk.
Away from that ET Now exclusive then, let's take a look at what the brokerages are saying about the budget. CLSA is calling it a judicious budget, and they're saying that fiscal discipline is taking center stage. In fact, they're also saying that there's no consumption boost, there's no populism, and lower fiscal deficit should lead to lower bond yields, and that's the word coming in from CLSA. In terms of stock-specific news, however, they're saying that there is no major stock-specific news as such. And they're also saying that nearly 45% of the increase in capex has been kept for new schemes, which will be announced in the future. So that is about capex. And in fact, what CLSA is also saying is that the key focus areas would be new energy, railways, affordable housing. And that is something that has been indicated in the interim budget. So that's the word coming in from CLSA. But when you look at what BOFA is also saying, they're saying that this time prudence has trumped populism, and continued fiscal consolidation is something that we've seen being indicated, that rather BOFA has seen being indicated. And continued credibility in terms of the fiscal math is something that BOFA is also seeing. Now, let's also take a look at what Jeffries is saying in terms of what they see the budget doing. And they're saying that it is doing the right things. And they're also saying that tighter fiscal reflects confidence in re-election, because the FY25 budget is fiscally tighter than market expectations, which is remarkable, they say, that because we do have the re-election confidence that is being indicated by this particular move. Now, 16% jump in capex is better than their expectations. They're also clearly highlighting government priorities. So that largely is the word coming in from Jeffries. In terms of their targets, they're raising L&T to overweight in the model portfolio as capex stays strong, and in terms of additions, they're adding KEI to their portfolio. So that's the word coming in from Jeffries. And when you look at what UBS is also saying, UBS is saying that the budget is on track towards fiscal glide path, and that is something that they're highlighting. They're also saying that it projects better than expected fiscal consolidation of 70 basis points. And that's the word coming in from UBS as well. There are three things that they're also highlighting is moderation in capex growth, lower subsidies, as well as reasonable tax assumptions. So that is largely the handover coming in terms of brokerage notes on the interim budget.
Well, yes, absolutely. And let's take a move on then and talk about Paytm, because day after RBI restricted Paytm operations, CEO Vijay Shekhar Sharma said that the central bank's order is more of a speed bump. Listen in to him, and the COO Bhavesh Gupta also note that the stock was locked 20% on lower circuit ever since trading started yesterday. Let's see how this impacts the stock today. But for the meanwhile, listen in to both of them.
I think it is a bit of both. There is no doubt about it that the very nature that payment business is significantly carried by parent Paytm in this situation, as you just heard us talking about it. So bank did have dependency on Paytm for its some of the payments offerings like wallet, etc. And we were able to deliver a lot of comfort, but it seems like, which is the second part that you're asking, that they were not completely comfortable.
We have obviously started discussions with the relevant authorities, both in RBI and NPCI, etc., who are helping us extremely well to see to it that how can this migration happen. And there are precedents in the past wherein we've seen that there was disruption in some other bank, etc., in the past, and this handles were able to get changed, or VPAs were able to get changed. But we don't know at this point in time what will be the migration journey. I think we'll have better clarity in a week from today. But we are pursuing both the approaches, and we're very positive to be able to meet the timelines of this migration with least disruption. Talking about 40 million merchants out there on UPI acquiring, although those merchants also do other acquiring. So it's a large set of migration to happen. So it needs guidance from both the NPCI and RBI, and the discussions have started. So what and how will they guide and appropriately guide us? We will see maybe in some course of time next week. And whatever is the guidance that we get from them, we'll adhere to that guidance. The idea from both the sides, from our end and obviously from the other side, is to ensure that there's least disruption to merchants, because a large infrastructure wherein the people should not get inconvenienced. So we'll do whatever is the best and whatever is the right approach regulatorily allowed to this matter.
Well, let's also delve a little deeper into what the company also said in the con call in terms of what the move was, and also what brokerages are saying on this particular counter. Gaurav is standing by with that update.
Yes. So now RBI has taken strict actions against Paytm, and we know that they are not allowed to take any kind of deposits or credit transactions from the customers from 29 February. And the nodal account for 197, which is the parent company, and the Paytm Payment Bank are also going to get terminated by RBI. Now, how is this going to impact the company? Management has said that this is going to be a bump on the profitability for sure, and they believe that they will not be working with Paytm Payment Bank from here on. They will be working with a third-party payment bank, and they have already been doing this for the last 2 years. So they think that the transition process is going to be a little smooth for them, because they already have 3 commercial banks tied up with them, and all these banks are showing some kind of interest in taking nodal accounts from Paytm payment banks. They also said that during this period, I mean, they have 100 million active users, and the transition is going to take almost a few weeks, and during this period they will take a pause on the loan disbursements also. So this is also going to impact the business to some kind. Lastly, they believe that the RBI's notification will only impact the payment services segment, which contributes around 50 to 60% to their revenue, and apart from that, the other 2 segments, which is financial segment and the marketing, are going to remain the same. But all in all, because of the transition, which is believed to be completed by early March, and the normal operations are also expected to come in the next 6 months, they are expecting EBITDA loss somewhere in the range of 300 and 500 crores in the worst case scenario, according to the management. And based on this, we now have brokerages also who are being a little pessimistic about Paytm. So when we talk about JP Morgan, they have now downgraded the rating to underweight, and target price is also cut to 600 rupees. They believe that this is not an end of Paytm, but this is definitely going to be a speed bump on their profitability journey. And they also believe that the regulator actions are going to impair the profit pool, network effect, and credibility for the company. We also have Jefferies, who has maintained underweight rating, and they also cut the target price to around 500 rupees. And we also have Axis Capital, which downgraded the stock to sell, and the target price is also given to 450 rupees, because they also believe that there will be some kind of moderation in the disbursement, attrition in monthly transaction, and is also going to be there, and the operational challenges are also going to impact the profitability for business. So all in all, it is going to be impacting the company in a negative way, but let's see how investors take this call and how they react on the stock.
Well, yes, Gaurav, absolutely. Thanks so much for taking us through that. So not the end of the road, but rather just a speed bump. That's the word coming in from JP Morgan on Paytm. We'll see how this impacts the stock today. But with that, we'll slip into a very short breather on this edition of Market Cafe. We'll be right back with more stock-specific news, so you stay tuned. Hi there, welcome back. You're still watching Market Cafe on ET now. Thanks so much for staying tuned. Now, I'm being joined in the studio by my colleague Ansh, who's here to take us about the derivative snapshot for the day. And Ansh, it's strange, right? Because yesterday we had the budget. Also, we had the hangover coming in from the Fed policy. Also, the weekly expiry yesterday, 3 important cues, and still nothing happening in the market, rather flat. So what's the derivative snapshot looking like for today?
Right. So it was almost like a non-event day. We saw a range of around 0.8% in Nifty. So this was the shortest budget day range of last 12 budget. Also, we saw Nifty closing in that consolidation range of 21,500 and 21,800. But we also saw Nifty making a reverse head and shoulder chart pattern, which is actually bullish if it gives a breakout from the 21,800 level and sustains above it. On option front, we are seeing call writing at same 21,800, which is the upper range of that consolidation pattern, where we saw selling pressure in last few sessions as well. On downside, we are seeing active put writing at 21,700, indicating support around this level. So this is kind of a range bound trade is what traders are expecting in option segment. Let's have a quick view on Nifty Bank as well. And if you see the chart, Nifty Bank has actually closed between that 100 DMA and 50 DMA. That 46,500 level is the 50 DMA actually. So if we give an upside move, then 46,500 could be the first resistance, and if we break that, then 48,200 could be another key resistance. On downside, we are seeing some support at 45,400, which is the 100 DMA, and below that 43,400. Let's see what FIIs did in a previous session. So in index futures, we are seeing them adding 3,000 long contracts. They also covered 4,000 short contracts. So net to net, we are seeing net addition of around 7,000 contracts, due to which their total long position has jumped from 24.6% to 31.3%, with the total longs now at around 67,500 contracts, and this is what, up by around 58% in last 5 sessions. So this shows that FIIs are building their bullish stance in the market. So in short, market looks a bit range bound. If Nifty gives a breakout from the 21,800, then it may turn positive throughout the session.
Right, thank you so much for that roundup, Ansh. So it does look like lackluster is the word coming in when we look at the futures and options roundup this morning. But onto where shine was really missing. It was a mixed third quarter from Titan, but the sparkle was really there in the jewelry business revenue that was largely led by the festive season boom coupled with a double-digit buyer growth. Sharad is standing by with the earnings fine print. Sharad?
Well, importantly, if you look at it, there has been a kind of a target price cuts coming in from the brokerages, and of course the mixed set of numbers were there. Jefferies came out with their report and they have maintained a hold rating, but the target price has been reduced from 3650 to it's almost 3600. Margin miss, but in the current market they are stating that the 20% growth is strong going ahead. This is for the jewelry business, and if you look at the margins also of this, that has remained in the band, but there are other segments, which is the watches and the eyewear segment, that has seen volatility. Also the management retains its confidence in its outlook and has also displayed a strong execution of growth going ahead. And in the con call also they had stated that the fourth quarter would be better than the third quarter, and there was a spike in the gold prices in the month of December. That's why the demand got muted as well. Goldman Sachs also came out with their report. They have maintained buy. Target price has been cut from 4125 to 4075 rupees per share, and their jewelry business, they have stated, has been strong, but the studded demand, that has been soft going ahead, but management considers this a blip, which is a short-term phenomenon. And the competitive intensity, however, that has actually increased in the jewelry business, but overall Titan continues to gain market share. So this is what the brokerage are stating about Titan.
All right, Sharad, thanks so much for taking us through that. We'll see how Titan acts in trade today. But with that, we're timed out on this week's edition of Market Cafe. From me, Snehi Shah, my co-anchor Shayanti Singh, and the entire team that put this show together, thanks so much for taking the time out and watching. But you don't go anywhere, because while we're done on Market Cafe, the market takes all the action ahead for this last trading day for the week. So, well, we'll take your leave, but you stay tuned to the channel.